Today, I'm Sakshi Batra, and joining in with me is a very special guest, Mr. Kranti Badini, joins in from WealthMills Securities, and he'll help us understand how do we really see the markets moving from here on, and what's the best strategy that you as investors should follow from here. Thanks a lot, Mr. Badini, for taking the time out. Always a pleasure having you with us on business today. So again, a good day for the markets after those 2 days of declines. We've again seen the Sensex zooming over 700 points at close today. How did you look at the overall setup in the markets, and are we poised for the rally sustaining?
Sakshi, yes, after a 2 days rub off on the market, we are back again at Nifty above 17,200, which is a psychological figure, and also 200-day moving average, which is the crucial support zone for Nifty. So what, as I kept on telling in our show yesterday also, markets are at an inflection point right now. So at 17,200, how the global cues will help the market to sustain above this 17,200 is the crucial level we need to see. But one thing helped the market to sustain above this 17,200 level, coming back to the 200-day moving average, is the positive global cues that helped. Last night, US market also rebounded in the final hour, and the global cues helped us, the Indian market, to be in a positive zone today. And also crude is less than $100. That might help the market to sustain at a higher level. But nothing to worry or nothing to be too much exuberant about these market conditions. Is a part and parcel of the market. The current movement in the market, we can call it as a random walk theory. That means the markets are in a way ups and downs. Okay, it is a part of efficient bull market. So investors, any dip, definitely if anyone invested on a Monday, they would have gained 10% in any of the beaten down stock. So it's a very good market for the delivery based traders, and also for the investors to cherry pick the stocks for a long term.
Absolutely. It's a market that investors can look at to add on to some fundamentally strong stocks to their portfolio, but nothing to be exuberant or too worried about at this point in time. But let me talk to you about one or two stocks that have been in momentum throughout today's trading session, which were making news. And one was the Adani Wilmar stock, which has now zoomed over 800 rupees just 2 months after getting listed. A very sharp threefold move on the stock. How are you looking at the rally on this stock, and what should investors do now? Those who are holding on to the stock and those who still want to take a pie of the success story of Adani Wilmar.
Actually, without a shadow of doubt, if anyone invested in this stock and sitting on a mountain of profits, better the time to take back the capital. That is very much essential, because the stock has been in a momentum zone from quite a long time. And last few trading sessions, despite of the volatility and negativity in the market, the stock has been hitting the high. If you see, the one reason is the global cues, and also the geopolitical issues really helped the stock to stay on a momentum zone. So I advocate investors, due to the steep valuations the stock is right now showing, it's better to take back your capital. And if the rally is going to sustain, because it can be $1 million question, I can say, how far the stock is going to hit the targets, because every target everyone set up, the stock has been violating this target, the stock has been hitting those targets. So take back the capital and just enjoy the ride as long as the momentum is there in Adani Group stocks.
Okay, so take back some of your profit and your initial capital and enjoy the ride, because the stock is in momentum and the entire group stocks have been on a rise. So definitely for all those who had invested in the initial times or got the IPO allotment as well, those investors are definitely sitting on a mountain of profit right now as well. Auto stocks were in focus today, sir. I wanted to speak to you about those two-wheeler stocks like Bajaj Auto and Hero MotoCorp that have been lagging because of a whole lot of concerns on the auto space, be it the semiconductor issue, the muted demand, and all of it right there. But the stocks have finally started to move. Any recommendation here, or any suggestion for all the investors who've been wanting to ride the auto wave?
Right now, Sakshi, especially for the two-wheeler numbers, okay, we have not seen a significant traction in terms of the registration and the sales are concerned. but some kind of value buying is happening in these counters. Four-wheelers are much excited to be in four-wheeler stocks than two-wheeler stocks because that's going to be a big theme in India over a period of time. Probably right now because of the hiccups of semiconductors, that's playing a negative role for these stocks. But I'm quite exuberant for the four-wheeler auto ancillaries and four-wheeler stocks. There is a big theme that's going to emerge in India. Those investors who are looking for long-term investing, definitely they can do a cherry picking in four-wheeler stocks.
Okay, understood that. I also wanted to take your view on the recent IPO rush that we are seeing. Two IPOs back to back: Campus Activewear and Rainbow Children's Medicare. How would you advise investors to really look at this recent IPOs, and also which is the better one to pick for them, for all those investors who've been waiting for a long time? We had a pause in the primary market space, and now suddenly we are seeing more companies joining in as well. So how should one really decide?
Actually, both the companies are strong companies with a decent, good management and also decent balance sheets. But the history shows out of 100 IPOs that have been listed during this fall and volatility of the market, nearly 60% of IPOs are less than their listing price, are they just given up their listing gains. So if the traders or investors looking for just listing gains, they can definitely consider these kind of stocks. Thank God for them. If the on the listing day, if the market is good, they're going to gain some gains on the listing day itself. But if you are a serious investor, they can just probably wait for some time, cool off the momentous nature in the stock, and wait for at least 1-2 quarters results, and they can definitely chip into these kind of good business models. But as fundamentally speaking, both the companies, Campus as well as Rainbow Hospital, both have their identity in their businesses and line of sectors. So investor can subscribe for the IPO.
Okay, understood. So investors, long-term investors can definitely go ahead and subscribe to these issues because they are both fundamentally strong names in their own sectors. So you need to speak to your financial advisor and then take a pick on where should you go. But both these companies have strong fundamentals, as Mr. Bathini also pointed out. Thank you so much, Mr. Bathini, for sharing your insights on the markets and these specific views on the upcoming IPOs, as well as the current stocks that are in momentum. Always a pleasure having you with us.
Thank you, Sakshi.